Hey traders, it's 19th of July. My name is Marco and founder of Trade and Train. I'm just going to run through a market overview and a quick update on some of the positions we discussed in the previous video earlier this week. So just here on the dollar index, so what's coming up? We're just a few days, well 12 days away from the Fed announcing their monetary policy amendments. So in terms of rate cuts, we're expecting a minimum of 25 basis points, but according to the federal funds futures, implied traders now are expecting a 71% chance that the market is going to see a 50 basis points drop on interest rates from the Fed. So what will that mean for the markets? Well, essentially what we should see from that is a sell-off in the US dollar. Now that means obviously buy euro dollar, buy cable, buy Aussie, buy Kiwi, just because it should be a weakening of the US dollar. On the flip side, we should also see a potential strengthening of the indexes, or at least to prop up the indexes after disappointing earnings results so far, which was widely kind of expected. To what extent we weren't really sure. Netflix was the latest market to suffer some significant losses, a 10% drop yesterday. Now, looking at the dollar index, we can see that it rejected the 97.40 level that was discussed earlier in the week. We saw a big impulse movement yesterday, and usually after where you see a big impulse movement, there is usually a slight correction. If we drop down to smaller time frame, we can see that now this market is sort of testing the previous swing low here. And then the next move from this, I would have sort of expected, if we see some sort of rejection, will be come back down, test the 96.60, 96.70 area, and then should move on lower towards the 96. If we go back to the daily chart, you'll see this ascending trend line, part of a rising wedge. I would expect now then that if we are going to see a 50 basis points drop, I would expect to see the dollar tank somewhat, sell off somewhat. That should provide us with some excellent trading opportunities. Now, earlier in the week we primarily discussed, was it the right time to be buying sterling, with sterling being so overly undervalued, and certain commitment of traders signals plus technical levels that were being respected. And we've seen sterling bounce from 124 now to 125.32, so hopefully some of you took some excellent pips out of this market. Now's not a bad time to be taking some profits off the table, as we're approaching minor structure here at 25.66 and the descending trend line of the falling wedge. I would expect this market to break out and come up in a test 127.30. At 127.30, this is where we should then be looking at least taking a major proportion of our profits, because the market essentially from this point could decline like it did back here. However, my sort of forecast will be that we're going to run up somewhere into the 130s, 131, maybe even up to 132. And then by that point we're probably going to have Brexit concerns looming, although discussions yesterday from Barnier from the EU were looking at a resolution to the Irish backstop, which was obviously a positive discussions anyway for Brexit, and that aided with some positive moves on pound pairs. So we saw that move there yesterday. I'm just going to come to some of the other pound markets. So pound Swiss was another market we looked at. If we go up to the weekly chart, this was the level that we were looking at. Sorry, the line and the level was deleted for some reason. We see major structure through here, and we've seen a clear rejection of 122.60. If we go down to the 4-hourly chart now, perfect retest of support here, double bottom neckline, so our traders will be long from this level here. We'll be looking for first take profits somewhere in this region of around 123.50, and then we'll be looking for this market to run up towards 125 second targets. So really nice pips on the board here. Other market we're trading is pound Kiwi. Now this, if we go up to the higher time frame, these were charts that were sent out in our free Telegram group. You can see we've got a couple of options here, which is a target 1 and a target 2. Target 3 will be the top of the rising channel. So you can see multiple rejections of this ascending trend line. If we come down to the daily chart, you'll see a couple of nice tweezer bottoms or inside inside candle yesterday. We can looking for a break of the high. First targets, you can see it's about 1.5 to 1. If we then reach just below the previous high of this correction move, that's going to be just over a 12 to 1 return. So this is a really nice market to be involved in. We're also short euro pound. This has been moving really well. We've just taken first profits. If we look at this on the weekly chart, again, for some reason, apologies, my levels have, so we're looking at this rejection, and then we've also got the confluence with horizontal rejection here. You can see multiple rejections, and now what we're looking for, we've taken first profits. We want to see if this market is going to break. You can see how the bodies are just losing momentum. We're getting very wicky again like we did here. That's the long black thin lines up here if you're not sure what the wicks are. We can see this market rejecting. So now it's a matter of now looking for that next add-in opportunity. And you know, I think if we look through this structure level here, you can see why we took profits. Now it's just looking for the market to break below, come back, retest, and then we'll look to hold this one for further declines. If you're looking for a rally, maybe back up towards 9,000, even handle will be another entry place to be looking to get in. If we can see a little bit of strengthening of the euro compared to the sterling, that'll be a right shoulder, looking at that head and shoulders pattern potentially forming. Trade the right shoulder, the first lower high, and then looking for that long-term move that should see the market at least come down, test this area here. If we just look, we copy this here, we can see we've got a significant downward channel forming on the weekly chart. So there's a lot of pips available, but 86.50, 86.60 looks a really nice area for long-term targets. We've looked at pound New Zealand, pound Aussie, obviously very similar to pound New Zealand. We've got, let's just draw this in through here. You can see now we've had a clear rejection of this trend line. If we bring it back to the daily, we've seen momentum candle followed by these two candles sitting with inside this previous daily candle, a break above the daily candle. I think this was Tuesday, break above that, and we should see a continued rise in the value of pound against the Australian dollar. So nice opportunity here. If you want to drop it down to smaller time frames, then you can see we're still looking for the same break above here, but if you want to be a little bit more conservative, looking at the counter trend line, wait for that market to pierce this, and then look for your first higher low. Moving over to the indexes, because that was another area we were interested in. We've seen the Dow form this little box range at the top. We broke out of that, it's come back down. We've seen the market come back, retest the bottom of the range, and we've seen a sell-off in this market this morning. However, just prior to US Open, we are seeing a little bit of a bullish momentum return as it's retested this previous swing high here. So a little bit of uncertainty here. I think right now, even though the data and the earnings reports haven't been great out of the Dow, the one thing that is stopping this market from completely having a, let's say, a 2 to 4 or 5% correction is the fact that we've got the federal funds potentially cutting interest rates by 50 basis points, and as we've seen, that's what the federal funds futures imply, that nearly 71% of traders are anticipating a 50 basis points cut. So that's obviously the implication and why this market isn't correcting maybe as much as we'd anticipate on the back of poor earnings so far. Okay, so that's the end of our video for this week. Hope you have a great trading week and you've enjoyed the content. If you have enjoyed the content, please remember to hit like, share and subscribe. By subscribing, it's not going to cost you anything. It just means that every time we upload a video, it's going to come straight to your inbox without you having to search for our latest videos. Also, we have a free Telegram channel where we send out loads of information. Make sure you subscribe to that. It's free. The link will be in the text below, and we look forward to seeing you during the trading week next week. Have a great weekend. Bye bye.